The dilemma of accounting methods, cash or accrual basis, presented as a story. In the bustling town of somewhere, a small business named Sarah's Odds and Ends was gaining popularity for its assortment of unique goods. As the owner, Sarah, began to see an increase in sales, she realized it was time to take her accounting practices seriously. With tax season approaching, she faced a crucial decision. Should she adopt cash basis accounting or accrual basis accounting? Sarah started her research by exploring cash basis accounting. This method records income and expenses only when cash is exchanged. For example, if a customer paid for an item in January, Sarah would record that income immediately. Similarly, if she purchased supplies and paid for them in February, that expense would be recorded then. The simplicity of cash basis accounting appealed to Sarah. She appreciated how easy it was to track her cash flow since she could see exactly how much money was coming in and going out at any given moment. This method seemed particularly beneficial for her small business as it allowed her to manage her finances without needing extensive accounting knowledge. However, as Sarah delved deeper into the world of accounting methods, she discovered accrual basis accounting. Unlike cash basis accounting, this method records income when it is earned and expenses when they are incurred, regardless of when cash changes hands. For instance, if Sarah completed an order in December but received payment in January, under accrual accounting, she would still record that income in December. Sarah learned that accrual accounting provides a more accurate picture of a business's financial health over time. It reflects long-term performance rather than just immediate cash flow. This method could help her understand trends and make informed decisions about inventory purchases and future investments. After consulting with her accountant Bean Counters Dave Marshall and considering her business's growth trajectory, Sarah decided to adopt accrual basis accounting. Although it was more complex than cash basis accounting, she recognized that as Sarah's odds and ends continued to grow, having an accurate representation of her financial situation would be essential for making strategic decisions. By choosing accrual accounting, Sarah felt confident that she could better manage her inventory levels and anticipate future expenses based on earned revenue rather than just available cash. As the months went by, Sarah started to see the advantages of using the accrual basis. She could now track sales and expenses more accurately, allowing her to identify trends and make data-driven decisions. The financial reports provided a clearer picture of Sarah's odds and ends profitability, helping Sarah plan for the future and secure loans for expansion.